Okay, good night, everyone. I am your Clippy, and I'm back to share what I've learned about market structure. It's a very wide, vast topic, so I'm just going to take out a little slice of it. It may run into two sections. This may be a part one, and I have to go to a part two. But anyway, let's ride and roll. So as I said, I retired from teaching high school chemistry. And my philosophy here is to tell me and I'll forget, teach me, I'll remember, and if you involve me, I will learn. So this is to say that I will ask you to be involved. Is that okay with everyone?
Yep.
Let me hear your voices.
I can.
This
Yeah,
is
you're good.
Hello.
Yes, Megan, distinguished voice. Yeah. Market structure and how to identify and trade them. Okay, so what is market structure? Anyone want to say verbally? So you don't have to type, just say, what do you think market structure is? As I said, this involves everyone. Don't be shy. We all know each other by now. What is market structure? Nobody can say anything. Nobody knows anything. We have 22 people here.
Come on, guys, help them out.
Come on, man.
Those you guys with microphones, just help them out. Let's just make this a conversation.
Yeah, I don't like to be up here by myself.
I get it. I totally get it. I would say it's a reflection of the patterns of price action.
Reflection of pattern of price action.
And
Okay.
it's always left. It's always the history.
Yes. And so it's logging.
My mic working?
The two things,
Yep.
two
Yeah, we
words
got
here,
you,
price
Hillary.
action.
It looks like spiders.
Oh, market structure looks like spiders.
Okay. So market structure are patterns formed as a result of price action, which is selling, buying, and selling. And these patterns are made up of structures. For our purposes, we're going to be referring to the candles. Out of structures like stick patterns or so. So in this presentation, my attempt is to answer these two questions. Why do we need to understand market structure? Why are benefits and what are the benefits from understanding market structure? So these are the two questions that I'm about to answer, and we may get to them as we may not, because I have about 40 slides plus the chart itself. So we're, as I said, candlestick for our purposes. So candlesticks are the basic structural units of market structure. They can be likened to amino acid, which is a structural unit of protein. Similar to how the type of proteins form is based on the arrangement of the amino acids, the type of market structure form is also based on the arrangement of the candlesticks. So at the side here, I have a little amino acid. So what it looks like from the chemistry perspective, this side is a carboxylic side, end of it, this is the amine side. And that's where, and here it is where other structures can connect other amino acid to give us long chain or complex structure. So similar to the amino acid building the protein, likewise, candles build the pattern. So here's the basic structure of the candlestick. This used to be the stick form. And here there are 5 bits of information that are given here. What are they? Can anyone give me the information that are given here? There are 5 basic information that we have here.
Are you just wanting what you have on the screen already? Is that what you're asking for? The 5 bits of information?
Yeah.
Hello, open, close.
Yes,
Yeah.
we have open and close. Open, close, yeah. What else? That sounds like a blue. What else?
Highs and lows.
Huh?
Highs and lows.
Highs and lows. Good. Highs and lows. What
Whether it
else?
opened higher or closed higher, lower than it opened.
Okay, what else?
How much vol or the range, I guess, or the number.
Range. Got it. The
Points.
range. You got it, man. You're a sharp guy. So, candle is bullish or bearish. So we use green for the bullish and red to represent bearish. Based on the candle shown here, we have wick. The top and the bottom here is referred to as the wick, or some people would use the term shadow. But this is basically what a candle looks like. Typical candle. As I said, the red represents candle cell and green, blue. So types of candle patterns formation. We can put it in two categories, the number of candles as well as the direction of the candle. That's what developed the pattern. So single candle, double candles are triple or more than and more. Or the candle can be continuation or reversal. So these are the type of candle patterns. So we can break it into two categories, the number of candles, direction of the candles. So let's look at these candles. So based on the number below each of these candles, can you state whether each candle is bullish or bearish? So can we all see these 6 candles?
Yes.
Great. So Steve, go ahead, take it away.
Well, candle one is bullish.
Okay.
I would say, even though candle two has started out bearish, I still think it's a bullish candle because it's the wick's above 50%.
Excellent. Yeah, that's also bullish. What about number 3? Anybody else want to take a try? John?
I think that's a bullish candle, but I don't understand number 2, actually.
You don't understand number 2?
No.
Steve, could you explain that to him?
Well, in my mind, even though it starts out red, the buyers came back and the red had pushed it all the way down to the bottom, but the buyers came in and pushed it back up to where it was barely just a cap at the top.
Yeah, so it's really bullish because it passed the mid 50%. So basically, it's a bullish candle, even though it's red. So the buyers came in and
Because
pushed
the
it
bottom
down.
of that range closed higher than the middle of the previous candle?
Yeah.
Okay.
Bottom, yeah. So that makes it bullish.
Kind of. It doesn't really have to do anything with number 1, right?
Yeah, it doesn't have to do it.
Okay. I
it's
got it.
independent, right?
Yeah, all of them are independent.
Right.
Okay.
What about number 3?
Well, I would say that's a bullish candle, but
Yeah, clearly that is bullish. Number 4.
It would be bearish.
Amen. You want to try? I heard you whispering.
That's a bear club
Bearish.
candle. Yeah, it's a bearish, it's a club or a hammer.
Yeah, it's inverted. And number 5,
bear.
bearish. Number
Spindle, indecision.
indecision. Okay, great. You guys did great. Bullish, bullish, bullish. Yeah, bearish and indecision. Excellent. Now let's look at this.
So, Cliff, are those the only candle patterns right there?
No. Are those the only candle?
Are those the only possible or the typical, let's use the word typical, candle types?
We're going through them little by little.
Oh, okay, we're gonna do more because it's kind of fun. Okay.
Okay. All right. So here we have buying and selling. So here's my question. In terms of buying and selling, how has each of these candles changed? So let's start with the white candle. How has it changed in terms of buying and selling? And I only see 3 people. Who's here? Who else? Oh, Brandon is here. Let's hear it from Brandon. Let's hear from you, Brandon.
Sure,
Maybe.
you asked me right when I'm doing multitasking. So what are we asking here? In terms of buying and selling, how has
Can
it
you see
changed?
the screen?
I can see it beautifully. So
Let's deal with
okay,
white one, this one first.
so what happened is the market tried to reach down to a certain point, but because of the nature of the market, maybe there's more buys in the market, or there wasn't enough. There was it could be anything from like limit orders or just not enough volume here at the bottom of that wick or that shadow, that it pushed the market back up. And so it attempted to go short, but the market said, no, sorry, and then it goes up. So typically when we see big shadows like that, it means that there's a potential for a reversal.
All right. Okay. Excellent. Next one, selling.
And it's just the exact same opposite with that being the wick, and the market tried to push up, but something smacked them back down, and so if we see those like at a 50 or maybe at 100 or at an action point, that usually means that we want to be on the lookout for a reversal to the short side.
Excellent.
Is that a smack of Brandon candle?
I don't know. So as you said initially, it was selling, coming down, and so the buying pressure forces it back up. This one, initially, it was and selling pressure pushes back down. Good. Function of candles. Candles can give us entry, exit point, reversal point, sentiment of the market, strength of the trend, and retracement. So those are the 5 basic functions of the candle. Now let's look at a market structure here. So indicate whether this is which side of this, whether it's bullish and which side is bearish. You can draw on this, you can draw on it. I give you permission to do your little scribbling so you can determine which side is bearish, which side is bullish.
Like individual candles, or
No, the
side
bullish,
of chart?
the left side.
It's strong bullish or bearish sentiments. Where you see that, where you
Bullish.
see strong bullish sentiment or strong bearish sentiment.
Yeah,
Are you guys afraid? We know each other. What's going on?
What
Good
was the
draw.
question, Cleo?
What's the question?
It's written there.
bullish.
He's asking
Bearish.
you guys to
You
draw
indicated
where
on the
they,
chart. Yeah.
Hilarian's doing it. Hilarian's the artist.
Huh?
We're
Okay.
drawing. You might not be able to see it if you're not
Okay,
looking at
I've seen. Yeah, I see.
Now I can. I had to blow my screen up.
Yeah.
Whoa! Don't do
I
that
see.
again.
Whoa. So bullish. All right. So a lot of this one, the big green. What is this indicating? This big green circle.
There's a strong chance that his favorite song was playing on the radio and the driver just couldn't control himself.
That's bearish.
Okay. So decide bearish. Yes. Okay. Fantastic. Clap yourself. Good job. Bearish. Right, and entry could be down there, exit could be up there, depending on how you play it. All right. So are these two trends different? How are these two trends different? Can you erase this? How do I erase these?
I got it. Got it for you.
Okay, thank you. How are these two trends different? It's simple. We should get the answer long ago.
Well, one's up, one's down.
One is bullish, one is bearish. You just use that term. Okay. Candles are also given names based on their color, shape, and function. Depending on where these candles are formed on the chart, valuable information or stories can be elicited from for high probability setup or a proper entry and exit. So let's look at some of these candles and the name and patterns. So this is a full body, pure body candle, and this has a Japanese name, Green Marabozo. Don't worry much about the name, just concerned about the shape. So that these two, they are no wicks, which means the entry and the close are both high, are the same. The open and the close are the same as the high and the low. All right. Megan, these are, you said you're enjoying. So here we have inverted hammer and shooting stars. Can we see on the chart where we have inverted hammer and shooting star? Can we all see that?
Mhm. Yep, let
Mhm.
me get my pen.
What can we say about the location of these candles? That's the key in using the information for these candles. The key is location. What can we say about the location of each of these?
Well, they're kind of at the high, like this, but this one right here probably becomes a KPI.
Look for a new owner.
Okay.
This one down here on this low is
Because he was distracted by his
hot, is, I don't know if that qualifies in your book. It's kind of a bigger body. Here's one right here.
Mhm.
And that is a bullish one.
Mhm.
And it creates that V, pushes it up.
Okay. So we notice then that the shooting star after that, how does the market structure change? How does it change after the shooting star?
It's a reversal candle.
Reversal. Excellent. So it's a reversal candle. So we notice that after that closes, the market goes down.
Got a seat with a single game.
Aren't they both reversal candles?
Yes.
Can you see that? Where they're located. So that's why the location is very important in terms of where the candles are formed. Everyone got that? Any question?
Nope.
All right. Here I have this type of candle called doji. Mostly wicked, extremely small body, and either in the middle or at the extreme end. And they're referred to as doji. Or can we this is a spinning top, these are spinning top doji. Can we identify some on this chart again? Can we all identify them? Yes.
Well, I think you have them right here, right?
Yeah, that's a hammer. I haven't gotten to that, but I leave it there.
Oh, gotcha.
Okay.
Right there.
But it's still a doji when you look at it, right? And there's one circle there. Anyone see this one down here? Here's one down here. All right, Megan. Gotcha. Any question on these? No? Right. Let's move on. Note each candle location. As I said, here we have the hammer, which we could identify over here. And we all see that? We have the hanging man. So notice that they are the same, similar in shape, but the way they are turned are where they are located. So if you notice that the wick for this one is when it's called a when it's at the bottom here of the trend, then it's a hammer. Up here at the end of the here, it's a hanging man, because you hang man from an eye, right, from a tree or something up. So that's why this is a hanging man. While if you're down here, you don't hang someone on the ground on the lower level. So this is called a hammer. Any question? Yes, no, maybe so.
Nope.
All right. Note the location as I say and the name. So we have an inverted hammer and we had shooting stars. We can all identify these over here. Yes.
Yes.
Good. Inverted hammer. And we note their location. Location. Anyone know about real estate? I always say location. Location is important. But similar with these type of candles. Where they are located is going to give us lots of information. Okay. Now, continuation pattern. Bullish engulfing and bearish engulfing. Can we identify any other on the chart? Go ahead and identify any other than what I have marked out, if you can see any more. Are you guys hearing me?
Yeah, I'm looking. Yeah, that's a good one, Larry.
Well, how this thing works.
Yeah, that's good.
That's one, yeah. Okay. Engulfing, yeah. So these are for good guys. These are referred to as continuation patterns. Remember we said that we could put them in two categories. One, the number of candles, and the other one is whether they are continuation or reversal. These are some common patterns, which include more than 3 candles. We know these: double top, head and shoulder, rising wedge, and double bottom, inverted head and shoulder, and falling wedge. So here you can identify head and shoulder. We all see that?
Yes.
Yeah.
Common pattern. Here, you identify double bottom, or a huge W.
Big W.
Yeah. You'll see those pattern and flag. In general, we say that the market will go in the direction of the flagpole. So we see this and boom, up. We have double top. We all see that. All right, so main answers. In addition to market patterns, there are tools that are used for highlighting and demarcation of the chart. For example, we use trend line, we use horizontal line, we use rectangle, and we use Fibonacci. Other things that affect the market structure could be the time of the day, if it's a holiday, if it's the summer season, winter season, or Christmas season, and news. All of these will influence market structure. So these are a few from what we look at. These are just a few of the common candle patterns. With these shapes and pattern in mind, we can now turn to the chart. Failure is an enormous fear. Therefore, we make an effort to understand the subject area for any exam. Likewise, in trading, there's no difference in the field of trading. If we understand market structure, fear is significantly reduced. And we can say here, pattern inside market is a result of human emotions, news, and as I said, season and holidays. So let's look at some common market structure here, man. So list the types of market structure that we are familiar with.
Ranging market.
Ranging,
Outside range,
outside range, and
Channel.
channel are trending. So we
Yeah.
have ranging, outside range, and trending. So which type would this be described? Which type of structure is this?
Trending.
This is trending. Great. And the trending market, what type would we, how would we describe this one?
Range.
This is ranging market, and this one,
range,
range. And this one,
Trend.
Trend.
trend,
outside range.
outside range. So we could describe it as being outside range.
Ah.
All right. So let's go to the chart.
I've been electrocuted.
Cliff, are you trying to show your chart? Because well, we were seeing your presentation still.
Can you see the chart now?
No, you got to stop sharing and reshare.
Okay. Can you see my chart now?
Yep, you see now.
All right, great. This is what we refer to as a simulator. I just got it. So can we all see this chart here, this on this side, that this is the 5 minute?
Yep,
Can we see over here? This is the 1 minute.
yep.
We all see that? Okay. I'm going to the 1 hour. Can we see the 1 hour?
Yep.
Okay, this is where you'll find the tools. So what I would like you to do is to describe what you see here on the 1 hour, and then we'll go to the 5 minute.
Yeah, it looks like a trend.
You can draw on it, you know. You can draw on it, yeah.
It's like
Okay.
a ranging market, to
Channel,
me, but I
yeah.
don't, you know, I'm
Channel.
Like a channel.
or channel. That's what I meant. Going down. Yeah, that's wrong
Yeah.
word.
Okay.
Right concept, wrong word.
3 price cycles down.
You see that tree? Okay.
Around without an umbrella while it's raining.
All right.
Yeah, there you go.
That's
Something.
what you see. Okay, good. So now let's go to the 5 minute to erase these now.
Yeah, I got you.
All right, thank you. This is the 5 minutes. And I'm going to start this.
Just
That's the 5 minutes. So tell me what you're observing.
the chance.
See, the 5 minute and the 1 minute is going at the same time.
The owner of the house was confused as to who keeps making a mess on his terrace.
Tell me what you're observing. All right.
I
Let
would
me
say
pause and hear from you guys.
I think we're drawing.
Yeah. Okay. So we see here the 5 minutes. we see that it's going up. See all these different. So you're expecting a couple angle here. We drew this. You're expecting the angle. We have a trend. We can see that. Okay, great. And we have a trend here going up. Okay, so I'm going to start it again. So let's see if there's any change. Could you erase for me, please? Thank you.
That should be somewhere around the 50 right there.
All right, I'm going to stop. Describe what you observe now, both on the 5 and on the 1 minute.
Well, I think it's just doing this, right?
Okay, we see range over here. I
I
want
still
to see
think
that.
that this is gonna play out.
Uh-huh.
I mean, I would like a much wider view than here, right? See,
You'd want to see a wider view.
well, it's because you got
Okay,
two.
you want
You
to
got
see.
you just have two
You want
different.
to see a wider view of that? You could see a wider view of that.
Oh, that helps.
Yeah.
So you
Okay.
got-
You see a wider view of the 5 minutes.
yeah, that helps a lot. So you see how this looks like it's the. Now you can see that this is a channel.
Which is the
Right?
channel going up. You can see that. And on this, the 1 minute, we can also get it to a small so what we observe here,
Yeah. So you see,
you see the trend going up.
yeah.
All right, great. So let's put this back up bigger. Let's get it back here and get back this one here. So let me continue, and let's observe what we see. This was 2018, April of 2018. All right. Have we observed any change in the structure? Have we observed any change in the structure?
I don't think so yet.
Yeah.
No, I'm looking for it to break above this line up here.
This little dog is
That
What
one.
about over here? Okay.
I mean, if we've got a change here from this right here, from this downtrend, obviously, because this is where it broke your KPI. So I think it's expected to keep climbing at least
And here.
to that level.
Does it look over on the 1 minute? Does it look like it was ranging?
Yeah.
Kind of
You
break
get
up?
this little breakout.
Yeah.
It looks like I'd be ready to smack into that right there.
This look like a Brandon candle.
Yeah.
Even if something is ranging, you can still have, even if you have a range going on here, you can still be trending. You can still be in a channel going up, but you have this inside of the channel. Yes?
Yeah. Okay, so we see this huge candle that, do we think it's going to come back to test this top here?
It might, it's a verticality candle.
You think it might be a verticality candle?
It's just
Or do you think
abnormally large.
another candle may follow this?
It's a Brandon
back?
candle.
Yeah, that's smacky and it should retreat. But I'm still looking at the other chart. I think it's
Here's
got
the other chart.
it's
The
got
other
more to
chart.
go.
Big
Right.
fat lie.
The 5 minutes is to your left, yeah.
Yeah, that's where it's headed.
So you think it's heading up here? All right. So let's start.
Come
Let's
on,
resume.
buyers, jump on in.
Could you erase this, please?
Why it's just smack a Brandon though?
Huh? So resume. Right. So what have we observed now?
I got to where we're looking for it to go. Now
Looking for it to go here.
it'll do the retest back
Yep.
to they would tell us where it's going back to, but it's going to retest now.
So it came up to this level here, as you had expected. So we saw this level and said it will come up here. Which other level it could have gone to and turn? It can reach. Which other level we think it could reach to?
Here.
Yeah, it could reach to this as well.
Yeah.
Good. So let's continue. All right. So what have we observed here now? On the 1 minute.
Retracement.
Hello?
So, well, I'm having a hard. I'll. Everybody else needs to talk. I don't want to talk.
I want to get to it.
I don't want to. I don't want to tell you. Give you guys the answers.
Well, yeah, I would look forward to retrace back to whoever just drew that line, bounce off of that, and
Well, I don't know what you're saying. Whoever just drew that line, I don't know what.
they drew it on the 5 minute, and I expected to bounce off that purple line and then go back.
Can you write on the chart so I see you on here where you're?
Let's see, where's your purple line? It's right here. This way it should bounce, and then it should go back up to the top of the channel at a minimum, to the top of the channel. And then if it breaks through the top of the channel, it ought to keep going. Let's see, where's your top of your channel is about right here.
Okay.
So it should.
The other things we have seen this retest this stop here.
Yeah.
See that?
So yeah, she should bounce and go back up here.
All right. So we are seeing that. Anything else we are seeing? No. What would we be looking for here? What is one of the expectation we'll be looking for here at this point? Based on what we learn in trading.
Well, if it fails the 50, it'll go down. And if it
All right, so it's at the 50 now.
Huh?
Yeah.
It's at the 50 now. So if it fails, it comes on. And we see here we have something looking like a shooting star. We're selling us just a pressure from up here. Anything else we have observed?
To make all the difference.
Am I hearing someone say something different?
I think that was
Several passengers.
somebody's TVs in the background.
Oh, okay. All right. So we
Cliff,
haven't gotten up to this level on the 5 as yet. And
Cliff,
yeah.
ask a question, please. When you were saying over here, it was expected to go to this level, and then you said it could also, where else could it go? And it could go to the second level.
Which is up here, yeah.
Right. Why is that? Is because it's like a 2 price cycle? or
Well, here we see here is on the here you notice that the decisions were made here where the market turned at this point, came here and turn, came here and turn. So this would be a level where if you were trading for money, this would be where you would want to take profit, or you would wait to see if it goes through.
is that then? So that's max profit based off of the structure back to the left.
Well, you could say max profit, but I think we want to change that terminology and say, that's where your first chance of getting profit. I think yesterday we were debating whether we should change from saying max profit or just said your first gain in profit. But
Okay.
for
Yeah, no, it's that
It
if
depends
it
on.
if
Yeah,
it
go ahead.
crosses this, then yes, but it's
Yeah.
fighting this right here, right?
this
Yeah.
would be max
So
profit, yeah.
in my mind,
If it comes
this
up
is
here
the 50-50 right there. Because it's at 50% of this
of
move.
this move.
Oh, okay.
Or-
Okay.
So you're at 50-50 at the 50.
At
That's
the
what we
50
call it.
on this. And here, over here, we're also at 50 of this 50.
Mm-hmm.
Can we all see that? Anybody
Uh-huh.
else there?
I see it.
All right, so let's resume. Any question before any question? Any other question? All right. All right, so what have we observed now?
Mashed potatoes.
Wait, who said that?
That's a dollar. That's something. That is dollar.
It's dollable.
So it didn't fail the 50. We all see that. It tested the top here and quickly retraced. We all see that.
Mm.
Here we have a doji. What is this telling us? This doji candle here. What is it telling us?
Buyers are winning.
Buyers are winning.
Yeah, Doji's indecision, but it's got that long bottom tail, so the
Have a
buyers.
long wick.
Yeah.
It shows buying pressure. In this case, it shows buying pressure going up, right? We see these candle came down here and was pushed up. This came back down here and they haven't passed this level. So let's continue.
That's an ugly one. All right. They fighting.
Right, so I'll stop again. So what have we observed now in terms of the structure of this markets?
It's
What are we observing?
Maybe.
I see a flag
You
starting.
can draw on the chart.
I see that the lows,
You can draw on the chart and show me this.
the lows are getting higher right here. It's still bouncing down, but each time it's bouncing down a little bit less. So it still seems like the lows are getting higher.
The lows are getting higher.
Yeah, right here.
Okay.
So do you consider that an outside range? Is that what the structure would be?
No, this isn't. No, it
No.
would be outside range, yeah.
Once it
Outside
breaks
range
this,
in which direction? You mean outside of the
It is outside of the range right now.
I mean,
In the-
this is a major one, but
Yeah.
if it
but
breaks
Here, you mean
this,
the channel. outside the channel. That's what you're
outside the
referring to.
channel. I don't know if that's a thing or not. I'm just,
Okay.
you know.
Go ahead, Dave. I want to hear that.
So we see that we're getting lower highs. We all see that?
Yeah.
Test here, this is a lower high. This is a lower high. We are seeing here that it came out of this on the 1 minute, it came out of this channel, came back here, tested.
There's a good battle right there between,
Huh?
looking at those wicks between that green candle with the long wick, and then you got right after that, you've got the red can, like the bear candle with the long wick. So it's like there's a battle right there
Yeah.
between the bulls and the bears.
And if you note this week here, we see that this was the indecision. We could get a high buying pressure as well, selling pressure as well as buying pressure for this week here on the 1 minute. And we see a similar going on over here on the 5 minutes. We all see that?
Yep.
Great. So we see top. So it's dropping. Let's continue. So we see the candles that we look at individually, we can see them appear here in the chart and where they appear.
Mm-hmm.
All right, let's continue.
Yeah.
Right, so what have we observed now? Since that, could you erase this, please? What have we observed since you came here?
It went back inside the range.
Went
Something
back.
pretty important happened.
Yeah,
It failed to 50. It went down and tested that 50, and then it bounced off, and then it went down and went right back up above the 50.
the 50 of what?
This 50.
Huh?
And that our 50 line.
Okay. The 50 for between here and here.
That's the major 50 right there. That's not the 50 in the channel. That's the major 50, I believe.
You're talking about this between here and here.
No. I think this is the 50 of the major move on the 5 minute. That's the 5 minute 50.
Well, you're referring to the 5 minute 50. Okay.
I think that's this line here, isn't it, on the 1? So it tried it went back up, it came back down, tried again, it went right back up. So this is where the battle is taking place right here, really. So Dave said something major happened there too.
All right.
That's usually a 1, 2, 3 when he said that.
Well, this is what happened is it tried to break up with a W and then failed, got rejected really hard. And again, this is what I'm saying. This is the KPI, right? If it comes down and crosses this, then your market structure has changed once that happens.
Is going to change.
But if you were trading for buys, if you were in buys and caught that,
going
the
up.
rejection, the rejection event happened. You got out here, and then I'd be looking to jump into sells right there for a touch down to here.
coming down to this level.
Oh,
Mhm.
So right now it's pretty much somewhere about 50
Mhm.
right there.
But because of this major rejection, it's gonna try to push it down to here.
Yeah. Because you notice that's a huge wick for this rejection here. It's a huge wick.
Mm-hmm.
All right, so let's see what it's going to play out. Let's continue here.
Mm-hmm.
It went back up to test there.
What are these price? What are the candles movements? Just curious. Next time, can you measure those and tell me what the price cycles are?
I'm not sure if I can. Okay, yeah. Let's see.
Okay, so 2 to 3.
Mhm.
So
27 points.
You hit
4
that
bars.
area.
4 bars.
Yeah.
Let's see. From here.
yeah, that's
All right, so let's see, analyze this. So we noticed then that it got this rejection, this major one. It went back up again. The test didn't get that far, and it's get rejected. So it's came down to this was the level we said on the 5. We'd expect it to come back to.
The big M, isn't it?
yes, yeah. Mhm.
So here is where you're saying, David, if it crosses this area here, is going to, this would be the KPI. If it crosses this area, we're looking for it to come down. Now, if you the thing I want to notice is on at the top, notice the selling pressure, and that is indicated from these long wicks. We see that likewise on the 5. And we can see, yes, the M is forming. So based on what we observe here, how would we trade at this point here?
You wait for the break and then buy sells on the pullback. Is that
You could, okay. But what's one of the precautions we would normally take at this point?
Stay light.
Yeah, we trade light. Right? So at this point here, we trade light if we are not heavily invested in selling or buying. So let's continue.
Can I say something here, Cliffy?
Yeah.
I don't think I would have not to just say what you're saying, but because of the structure that came in the market, because of this rejection,
Mhm.
I would have recognized that it was coming down to test this point.
Mhm.
And this is a 0, this is a 1, this is a 2 with an M. I would take that all day long and build in to
Me.
this attempt for risk versus reward. So for me, I wouldn't be light. I would be at least 2 to 3 layers deep
Because
for
it's
this event.
because it's the second test
Yeah, with an M
with an M.
and
Oh yeah,
and a rejection event,
yeah.
right? So everything to me says it's going to break this,
Okay.
right?
Where would you put your first trade?
that's your
Or
3 pieces of evidence?
uh-huh. Where would I
So
put my
you-
first trade would be probably right here on this reach.
When it failed
which
this
would've-
50.
I would have got in right there, probably got in again as it popped up again,
Yeah.
and then got in again there, right there,
Mhm.
and then again right there.
Okay.
And this one, I probably would have put 2x as many right there, because this is like, oh, got confirmation that we're gonna touch this point.
Been nice.
And then I'm probably getting back in again.
When it
If
comes
it
up
comes-
here.
If it comes up to this point, I'll probably put a trade on.
That's what I was looking.
I'm securing everything here, so this is secured trade, and then I'll probably add another 1 or 2 trades there for the continuation. But if I don't get the continuation, I just close out everything right there.
And you probably got gold by then, though.
Yeah. Probably. If no, I don't know. That's why I said let's measure these. They're only 2 to 3 pips, so
Even, yeah, they're not much.
they're not. It's not a lot. It's not a huge moving market, but the structure is acting the same, right? Market structure is behaving.
Because this is about 4 pips. As
Yeah.
much as the time long.
Usually, I needed to go 10 pips to get goal.
Yeah. So we
So
see
probably
this
right
great
around here.
rejection, and also this is the M that you're referring to. I was thinking that it would
Mhm.
be a M that was before me hit down here. So you're looking at this bigger structure.
Mhm.
Okay, for the second attempt, I was looking at it to be forming down here. All right, thanks. Let's.
So here's the next question in this thing is like,
Hmm.
it's ranging. Is it going to come up and come back into the range, or is it going to come up and bounce here? That's what I'm saying.
Here.
I
Yeah.
would probably put a trade or 2 here, but have my
Sell.
secured trade of all these guys, all these trades right here. And if it does come back into this area, I'm getting out of these trades fairly quickly because, well, it's probably going to come and test the 50 of this range right here.
Okay.
So those are the 2 questions that I would be asking the market right now. What are you going to do? Are you going to come up? Are you going to come up and
And
bounce
test?
here and have further, or are you going to come up and
Continuation.
cross this point? Right. So those are the 2 questions I'd be wondering right now. Based upon what it does would be my reaction to that.
Okay. So if it comes up here, fail and turn, you would have sell right here.
Well, I
Like,
would add, I have all these
oh yeah,
cells up here
sell,
that
yeah,
I'm
all
adding,
these cells.
but I would add another one with a secure trade right there.
Oh, the
That's how
secure is
that's how-
here, and then you would add here.
Right. And that's how I'd play it. That's how I'd play that.
Okay. So let's see how it's play out this place.
You'd secure it before you added that sale.
Yeah.
Yeah.
Yeah, because this one, I don't want this to kind of give me a rejection event and come up to here really quickly without getting out and taking profit on all these guys.
Okay.
Right.
And this would be a result of this great pushback from up here.
Kind of, yes. Because of this rejection event, I expected it to come in and test here.
Dave,
But the journey of adding was how it got there.
Yeah,
If
because
it came down at 1 candle, I wouldn't have trusted it.
then you would have been buying for the retracement.
Yeah. Yeah. I wouldn't have trusted it. So it just
But
depends on
here
how
it
it-
failed the 50 of this one coming down. This it failed the 50 right here.
Mhm.
And it's a huge candle, and you get a rejection here, and then again with enter.
Yep.
So let's see how this continue.
Dave, how much when you are clearing trades, how much profit does it need to be? How many pips before you clear the trade?
I would have hit goal, by the way, everybody, just so you know. So how many pips would you have cleared? Is that what you're saying? I'm not
Right.
sure what you mean.
I'm trying to, like you're putting these trades in, and some of them are, haven't moved very much into the profit, and some have moved. When is it sufficient? Where when you're setting your okay, this is where I'm gonna clear these trades out. At what point do they have to move into profit before it makes it worthwhile to clear it all out? I know you don't want them to move negative against you. That's bad off the bat. So sometimes
I don't really look at it in terms of how many pips that I've gained in profit. I look at it, it's all about market structure. It's all about where the exit is.
I got
Where that exit is, right? And I'm probably not trading this market right now if I'm only getting 2 pips in price cycles, right?
Right.
So usually I like to be around 8 to 10 in my price cycles, and that I'll enter the market. But so I don't look at it in how much money how many pips or how much money do I need on the table before I take it? No, I always look at it as where's the exit. And like I said, I would have added another one here, and then on this break right here, I secure my trade. Now I have no idea because, well, the information is not present to me. I'd have to widen out or look over at the 5 to see where the next. In fact, can you show me the 5 really quick? So my next thing is, I think it's coming down to here. And so if it's not going to come straight down. If it does, great. But this is where I enter a prove me wrong trade. Is if it crosses this, I'll secure it here for a prove me wrong. And then just think, okay, it's going to come down to here, but I don't think it's going to come all the way down there without giving some bouncing, without bouncing around. But this is where it's going. It's going to this point. How it gets to this point is the question mark.
Yeah, it needs to be straight down as well as it may bounce.
So
if it comes straight down, I'm probably closing out and getting into buys for a 50% retracement of this right here.
Okay.
So it really does depend, and this is why we're talking about market structure, because it broke the KPI right there that we said, for this, and you should be in sells, but if the verticality comes down, hits that, maybe you should be buying again, right? So
Dave, at risk of being the stupid student in the room, I'm going to ask a question. So if you're securing that, do you take, because it's going to bounce a little bit and you don't want it necessarily to take you out, but you want to be secured, are you using maybe one price cycle to back from where it might be to give it a little bit of space to bounce before it might, head south in a bigger way? Or how tight what's your rule for how tight you secure that?
It depends on how much money I have on the book, how much money I have already generated. So on this move, I'm feeling like we're at the end, we're pretty close to the end of this move, right? And we're due a pullback because you got 1 price cycle, 2 price cycles, 3 price cycles. So we're due a pullback, and I don't want to give a full price cycle back. So like I said, if it crosses right here, just it crosses and closes with the body, I'll secure for a PMW right there. And that could be if I secure here and the body closes and the body of the candle closes here, that could be really tight and I get it back. You know what I mean? So it doesn't really matter. You're asking the question in terms of how much profit or how much does the market have to move. It really is. It crosses this point, I'll secure. Do you know what I mean? Yeah. I'll take my profit. How it gets there too. Like if it just comes straight down and hits it really quickly, I'll get out because it'll pull back. So there's a case of when and how, right? And that's what honestly, that's what I love about the market is because I don't know. I'm often right on where it's going, but wrong on how it gets there. And how it gets there is really important how you play it, right? Or how you take advantage of it.
But we secure for different reasons. So, it's going to be subjective.
It is subjective for sure, or it's not, I wouldn't necessarily say the word subjective. It's based upon you as the trader
That's
to to use the right tool for the right instance, right? Brendan, you say you solved my issue of 505%. I'm not sure what 500.
Brandon did.
Oh, what's 505%?
They were talking. The question was about securing, and Brandon suggested that it be done. He meant 50%, but he put 505%. So
oh.
I got it. Okay, I got
that's
it.
what I was doing wrong the whole time. Just
It's
505%.
you were doing it at 50, not 505. I got it. It was a joke. I'm
Anyway,
tired.
anyway, guys, as I had said initially at the beginning, that this might run for part one and part two, because
Sure.
we need to tie it up. So I know it's after almost.
It's past my bedtime. And it's past Megan's bedtime too.
Yeah,
Holy cow.
definitely.
Exactly. So I'm gonna have to continue this on another occasion.
Well, let's see how this plays out then. Now I'm curious. So just fast forward. Let's see if it goes down to here. You can't leave me hanging.
Okay, I can fast forward it to see a little faster.
Well, one thing, Dave, I think you cleared up a couple of points about, taking
Here
that,
it goes, boom.
taking.
Okay, slow it down. There we go. See it hit this line right here,
Oh, my W.
right? It
Yeah.
hit that line right there and it bounced right off of it. So again, this is where I would have taken the profit, or at least done a PMW right off this body over off the one, because my entries or my exits are on the one. So right here, shooting down, I probably would have put a PMW right there, and this candle would have knocked me out of all of this right there. And then I probably would have been done trading, because I'm like, well, got my goal, move on, right?
Right. All
Hmm.
right.
Brendan, just really quick, I always have the 1, the 5, and sometimes the hour that I look at. Just depends on if I can see the action points, if I have to widen out or not.
Thank you.
Cliffy, thank you
Yes,
so
sir.
much.
Thank
This is
you,
we
guys.
got the basics of market structure. We hit the candles. Candle patterns are really important. We don't really talk about them a lot, like the dojis, the morning stars, the hammers. I do think sometimes you can find yourself in the weeds with some of those in the 1 minute. Just like I don't trust Head and Shoulders on the 1 minute. I don't necessarily trust dojis and hammers on the 1 minute, but they're so good to see on like the 5 or the larger time frames, because that just tells you the pressure that's coming into the market, right? Because you're going to get a lot of
On
like
the
here
1 minute.
on the 1 minute that'll formulate. And so my least, if I'm trying to find pieces of evidence, my least favorite piece of evidence is wicks, right? Is the wicks forming, but I'll still use them if I get a lot of wicks in a row and saying, oh, we're getting top pressure. But
right here.
yeah, you just like on the 1 minute, you don't get that on the 5 or as much, right? And so that's why it's more important on the larger time frames. When you see those candlesticks, they can definitely, ultimately, the only reason why you're hunting for candlesticks is to give you a inclination of what the direction is what direction it's going to move. Just like this rejection event right here that we talked about, and then you followed up by another rejection event on another attempt to reach. Right, it
You
gives
see
you
the
that.
same thing on the 5 too.
Yep, it gives you that inclination of that we're moving lower, right? And it's the same analysis that we just did for the past 20 minutes that helps me in my overnight trading as well, right? And I'm already secured from this. I told you guys at the beginning of this to get into sells.
I was in sales, but I got out before I started.
No, I was at the beginning of this, and now I'm secured for goal, and I'm gonna go to bed. So my overnight trades are set up, and we'll see what happens in the morning, right? So
I got out at the start of the
But
presentation.
it's the same exactly. It's the same analysis that we do all the time. So Cliff, thank you very much for market structure 101. And like you said, there's so many things that we could talk about market structure, and so
man.
so many things. And so I appreciate you taking the time to put this together, Cliff, and driving this. So appreciate it.
Yeah,
Any last?
you guys for turning up.
Yes, thank you guys for coming out,
That's cool.
and we will we'll go ahead and close here, and we will see you
Thanks,
guys.
And you're welcome. We'll continue this another time.
We'll see you guys in the morning for another Good Morning Cliffy.
Yeah.
Thanks, guys. We'll
Good
see you.
job.
Good night,
Thank you.
Cliff.
Thank you.
Good
Have a
night,
good one.
Cliff.
All right. Good night.
Bye-bye.